Morning, guys. It's 8:45 on Thursday, the 4th of December. This is the Euro Yen chart. It's the 4-hour chart, and I'm just going to do a quick update video on this short setup that we've been tracking over the last couple of days. So, as you can see here, we had this break that we highlighted earlier on in the week. So broke here, and as you can see, pretty sharp break here to the downside. And then, as what quite often happens in these cases, is you get the initial break and then you start to get the retrace. Now, what sometimes happens is that this retrace doesn't necessarily, it can fail before it actually gets back to the actual trend line. So we just have to keep an eye out here for general weakness. The ideal situation would be for this to sort of get up to around these sort of levels and then fall away. But as I always say, it's never, you can never depend on the market to do exactly what you want. That's what I would like to see, but I'll be keeping an eye out for the alternative situations that could develop. One of those is that it could fail somewhere around these sort of levels here and then fall away, in which case let's just take a look here at the lower. I'll get rid of that line. Let's just take a look at the 1-hour chart. And so if there's any weakness around these sort of levels, where would I be interested in? Well, one trend line that sort of jumps out at me is maybe something like this. So if there was something like this sort of thing, I might be interested in taking a short somewhere around there. But like I say, the ideal situation would be that we got up to around these sort of levels. Let's just go back out to the 4-hour chart here for a second. I just want to show you those are the alternatives that if we do, those are the options to us if price does decline. Obviously, we always have to consider what we would do if this doesn't work out the way we would like it to. Just do this in blue again. I will see this as a failed trade. These here would be levels. Oh, sorry. I'll actually just put a line across there, I think. So yeah, something like this. Those sort of levels. I would above there. So if price followed a path, something along, got above the trend line, found support the trend line, and then up again, I would be, I begin to say, right, the short thesis there clearly isn't working out. One final thing that you do see happening on these trend line breaks sometimes is you see a little sort of a track on the underside of it. It just hugs underneath it. 1, 2, maybe 3 tests underneath it, just a general consolidation, but always respecting the trend line, and then the fall away. So I said at the beginning of this series that we do always have to remain patient on these things. They do sometimes take some time to work themselves out, but we have set our boundaries here. We've seen where we would like to get involved, and we've seen where our line in the sand is, which if price gets beyond those sort of levels, we have to concede that we are wrong and begin to cut losses. But so far, no trades taken. I missed this one here because I was asleep. But as I said at the time, you always get more opportunities further down the line. In fact, had I have made the trade there, I would have got stopped out here, break even. So, grateful for those small mercies. But let's keep an eye on this anyway. Still firmly in the sell zone, looking for sells up to on the underside of this trend line for a fall away. Hopefully in the magnitude of a few hundred pips. Keep stops as low as possible. on euro yen, probably 20 pips. You shouldn't really need to be going much more than 20, 30, 40 absolute max. There's no need to be spending any more than that to prove that you're wrong. And like I say, should price begin to move in our direction, we can get aggressive, add positions if possible, and maximize any potential opportunity that we have here for gains. Hope you found this useful. I'll try and update as this goes on. Oh, one final thing. Draghi, the European Central Bank, decision and press conference today. So just just before I go, a couple of things about trading around the news. Some people say just avoid news events altogether. I wouldn't generally subscribe to that rule, but you also have to just be cognizant, be accepting of the fact that spreads will go pretty high. So particularly at the start of the news conference. So you've got to be prepared for your broker to be passing on the effects of low liquidity and stuff through to its clients. So you've got to be mindful that stops will be slipped, spreads will be very wide, but it's around these news events where you start to get the 100, 200, 300 pip moves. Large trends are often kicked off by stuff that comes out of central bank meetings. So I think it doesn't really do you a service to just have a blanket rule to say I never trade the market anywhere around news events. I don't think that's wise. But at the same time, if you are intending on trying to chase a move that's prompted by a news event such as a central bank uh, uh, press conference or announcement, you just have to be aware that in all likelihood your entry will be slipped, possibly by quite a few pips. But would you pay a 20 pip slippage if you thought you were going to get a 200-300 pip move? I take that every single day of the week myself. But that's up to each individual trader to decide. So hope you found that helpful. As I say, I'll try and update this as it materializes, and I will see you again soon. Thanks very much.